Good morning. It's May 22nd, and you are in the DecisionPoint trading room. Welcome, everyone. My name is Erin Swenlin, and I am here with my father, Carl Swenlin, and we're going to get you ready for the week ahead. We're going to look at the market. We're going to look at the sectors. We're going to look into some industry groups, and I think that'll get you well prepared. Before we start, though, I want to remind you that the Q&A box is where you're going to put your symbol requests for us. Please, only one symbol request per person. That way we can make sure we get to as many as possible. The chat box is for you. My moderator is not here today, so if any of my diamond subscribers are out there and they want to take the role, that would be wonderful. So just go in there and chat with the group. You do need to send your chat messages, need to use the drop-down menu above the comment and send it to everyone. Otherwise, just Carl and I get it, and we don't monitor the chat box. We are only monitoring the Q&A box. All right, that's all we have for the business at hand. So let's go ahead and Dad, I'm going to pass it to you. What's going on? I know you had something you wanted to discuss from last week.
I did, and you need to stall. I'm having trouble with that blasted Q&A box.
Oh, I know. You have to. Yeah, you have to grab it either at the very top or like at the very bottom so that you can move it. But I know what you're talking about.
There we go. Jeez, I'll tell you.
Don't make it easy, that's for sure.
All right. Okay, well, to start out, last week I said that we wouldn't be here because of Memorial Day this week. But that's actually next week. So next week is a short one. And I'm kind of wondering what the slow pace of the market is right now today. And it may have something to do with just prep before the holiday week next week. So it looks like we have 2 trading days next week. So I think we're going to cover the monthly charts on the end of week DPA this week.
Yes.
Anyway, last week we got a question that we couldn't get to, and I promised I would cover it this week. It has to do with the advanced decline line. And here I am all just all on top of everything. I forgot to get my mic going. How to interpret the advanced decline line for stocks. Many stocks are either in a downturn or sideways, but the AD line keeps going up. How to differentiate between the real versus false positive AD line. Okay, let's start out. The advanced decline line is updated each day. It's a cumulative figure. You take the day's advances minus the declines, and you add the result to the cumulative line. We also keep an advanced decline volume line, which is the same thing, except when the stock advances, we add that amount of volume to the advanced decline volume line. And when it declines, we subtract it. And I find that the advanced decline volume line tends to be a lot more sensitive than the advanced decline line. First, think of it. It's not weighted in any way, the advanced decline line. It's so if you have 5 days when a stock is up a penny each day, and then on a 6th day, it drops 5 cents. Now you have a net 0 on the advanced decline line, and yet you're net 0 on the price for that 6 days, but on the advanced decline line, you should have a net upside of 4 points. If we notice on these 2 advanced decline lines here, we have scale. Ignore that. There's no way you can compare it to anything else. It's just what you look for is how this line is traveling, which direction, and etc. Now, the advanced decline for the SPY, that's a very homogeneous group of stocks. That's the best grade of a large cap stock. And you notice that it's basically moved sideways. We did have a new high right here at this sucker rally, and then a new low for this distance, right, as we came off of that rally. And it has been rising along with price. You can see that the advanced decline volume is much more pronounced in the decline, and notice that it's really fallen off. We have a new high in price, but we're way back on the net advances. Now, I've got three in our primary list. I've got three in the indexes covered. Here's the New York Stock Exchange, same two advanced decline lines. And notice that this is a broad mix of stocks. So you've got a much better result on the advanced decline line. And again, the advanced decline volume is still more pronounced to the downside. And again, we made a new low where we have a higher low in price. Again, these are equal weighted, and it doesn't reflect necessarily where the price is going to be. Now, here's the NASDAQ advanced decline lines. Notice that, well, you notice over time, and I'll zoom it out for in a minute, but the advanced decline line for the NASDAQ trends downward over time. It's always making new lows and never makes new highs. Advanced decline volume again does show the advance here, and that keeps going higher and higher. Again, these are really hard to deal with. The advanced decline line, I do keep an eye on it, but I rarely use it. I use our Golden Cross and Silver Cross indexes to get the best idea of breadth. The Silver Cross index shows a percent of stocks with the 20 EMA above the 50-day EMA. And that's an intermediate term timing signal. So these, right now we've got, as of Friday, we've got 44% of the S&P 500 stocks are on a buy signal. And yet the price line is rallying. And I should say, I mean, you ask yourself, how can it be this low on buy signals and yet price is advancing? I had another trend timing model that I used to follow, and it was active during the period of the 2000 price top. And at that time, I noticed that we had 50% of the stocks in the S&P 500 were on buy signals, only 50%, as it was hitting at that time, approaching all-time highs. So how does this happen? We have, I heard this morning, something like 80% of the S&P 500 advance is accounted for by 7 or 8 big stocks. So you have that ridiculous concentration of money and volume and price in that small groups of stocks. So it's really hard to gauge it sometimes. But nevertheless, if you're following price, that's fine and good. But at this point, it's much more dangerous than it was at this point or at this point. So keep that in mind. We are bearish because of this, and we'll see how this all washes out. All right, let me get over to the market. We got the S&P 500 SPY has broken to a new high level for this period right here. Yes, the PMO is on a PMO buy is above the zero line, so that is positive. That's measuring your price movement. Okay, here's the resistance line right here. Note that we're in a rising wedge, very slightly rising on the top, but it's still a wedge, and we expect it to break down out of that. Not guaranteed. The US dollar, we've got it's in an upswing short term. Let's look at it longer term here. So it has broken a declining tops line, and right now we'll be looking for resistance at this level here. Gold, with the dollar on the rise, it's suffering somewhat. This is our relative strength of gold versus the dollar, and notice that gold is dropping off in strength versus the dollar. Let me move up another time period here, a much more broad look at it, and coming down in the rising trend channel. And as I said before, we have on a weekly basis, we noticed we had these parabolic up moves, and they were stopped at this line of resistance. Once again, we have an up move, but it's more deliberate, and I think this will be the third time being charmed, but we're still coming back to this rising trend line, and it could come down faster, or it might drift more sideways than down and catch it anyway. But I think after this little decline is done, this is, me looking into the crystal ball. That's what it looks like at this point. Oil, I'm not too excited about it. Let me look at a weekly chart. Coming back to this rising trend line, that's not so important as this line of support right here, drawn first through this at the bottom of this gap and then across this top. That could be significant, and I just still say how much lower can it go when you think of the shortage of energy globally. Here's the 20-year T-bill. T-bonds, long term. They're in a trading range. Let's move up to the 1 year. There's the trading range again. Potentially may drop down out of this, but we've got this support right in here, and then it's got to come down here. The weekly PMO is topped, which is bearish, and it's topped below the zero line. Looking at yields, the yield array, we've got everything from the 1 month to the 30-year in here, and it's note that the 1 month is at about 5.5%, and the short, of course, we do have an inversion. But again, we've had this nice area of support, which appears that we're moving up off of that for another rally in yields. Here's the 10-year yield on a longer term view, and it's up today almost a percentage point. Bitcoin, I've been pointing out this rounded top, which I thought this was going to be the start of the really extended down leg, but it recovered it that day, and it's been moving sideways ever since. And it's about to sneak out from under this rounded top. Apple being one of the stocks that's holding the market up. Today, we're getting somewhat down, and I still think this rising wedge is a valid formation. This is a 2-year chart, so it makes it a little more severe than it is if it were short term. But it's trying to break out of that, try to get above that resistance, but it's back right about on the line right now. I think that's it. Did I miss anything?
I don't think you did. No, I think we're good. So let's see
if we have any questions.
There are some questions for you. I thought this one was interesting, and I'm definitely interested in your opinion. I think I know the answer just because of the way we've been annotating our charts. But the question Adif has is it not? Is the S&P 500 making an ascending triangle with 4,200 being the flat line on the top and the October, December, March rising bottoms as the ascent for that triangle?
Okay, here it is on the SPY. And I would, again, there's the top of it is not very steep, but it's still there it is. And it's trying to get out of that. Don't know how that's going to work, but certainly internals are weaker than they were over here. So yes, there is an ascending triangle. Ascending triangle? No, ascending wedge.
Yes.
Yeah, I can see where if you weren't very meticulous about drawing this line, it could easily be a triangle.
Right.
But the result is the same, is it not?
Yeah. Well, no, because the ascending triangle is bullish. It would imply a breakout because the bottom of it is ascending. You're getting that.
Okay.
Yeah.
All right. Yeah. So the wedge should break down. A triangle, the flat line is the weakest, so it could break up.
Right. Unfortunately, the chart pattern there isn't super helpful because it does, I think you could make a case to draw that flat top, but based on what we're seeing and, not that we're trying to fit our analysis to what's going on, but we need to draw it very, very meticulously so that we are getting the right one. And in our opinion, it's a rising wedge.
Okay. Would you say we are still in a bear market rally? Yes. Is there a difference between 80 lines of index versus 80 line of individual stocks? There is no such thing as an 80 line of individual stocks. That would be the advance and decline of the price index for that stock.
Right.
The lines take into account every stock in the index. And you add up the advances minus declines.
Yep.
Okay, difference between advanced decline versus accumulation distribution lines. The advanced decline line is a market index, a market indicator, because it takes aggregate data from the stocks within that index. The accumulation distribution lines, and I don't use those, but that's an individual price index. That is calculated off the price index of, say, SPY or IBM, that type of thing.
Right. Well, and also it can be used on individual stocks. Sort of, a lot of people use it instead of the OBV, which we like to use. So it's more of an individual stock where we're talking like we did with the others. It's a market indicator. So it is accumulation for AD, but accumulation distribution is a single stock typically. for that, but I think you can calculate it for the index, but I've never done that. So, I mean, you could for the individual index, but
Yeah,
there's no
but it's-
aggregate to be had.
Yeah. Okay, I think that's all of the general questions. Let's
All
start
right.
with the ZM for you.
All right. Well, I do need to go over those sectors, so I will do that first. Let's see here, but we'll move on through that in the next 10 minutes. So I know it sounds amazing that I could get through something in 10 minutes, but I think I can. All right. So let me get to the sectors here. And I did have one comment, and I'll talk about that after I look at this. So this is all of the sectors with the PMO and the StockCharts technical rank. You can read about the StockCharts technical rank elsewhere, but ultimately you want it to be high. You don't want it to be low. The ones that have the PMO rising currently, there's a handful of them. We have comm services, we have discretionary, we have technology, with a little bit of a smattering of industrials, which looks like it's turning up. And on healthcare, it looks like it might be turning up. Financials, the PMO is rising, but I've been very hesitant to recommend or suggest or pick stocks from the financial sector, mainly because I just think they carry a higher risk than some of the others. So these are kind of where we're seeing a lot of action in terms of these sectors trying to make the turn. The only ones that are really showing that major strength would be these three. And it occurred to me as we were looking at the top 10 capitalized stocks, we've been discussing how the mega caps are the ones that are leading this market. And where are all those mega cap stocks? These are cap weighted sectors, and the majority of them are in the technology sector. We have, I think, 2 of them in the retail section or the consumer discretionary, and then we have comm services. So I think this is just really proof in the pudding, as they say, that these mega caps are leading, because these are the sectors. And typically when these sectors lead, these are aggressive growth areas. So typically when they lead, you will see the market move higher, because again, those top 10 capitalized stocks are mostly within those sectors. And typically you're going to see the rest of the market join in. And I think the big problem is the rest of the market is not joining in. There are major problems under the hood, as we like to say. So just keep that in mind. So we do have these sectors and they do look good, and that usually is a good thing for the market. But the things that are supposed to happen when these sectors lead isn't happening. And so we have to be very careful because of that. So that was my main discussion about the sectors. I did want to talk about energy a little bit, because we are starting to see some movement on that chart. And all of these charts are available to our subscribers. So if any of these look interesting to you, they are available to you as a subscriber. And if you want to know where that is, just send me an email, or I'll show you really quickly here. This is our lovely website. These are the chart lists that we have on the site. I will say that this is under construction. Our ETF tracker is not currently pointing to an ETF tracker, but we will start looking at the ETF tracker. You can look at the main ETFs. That's going to be available to you soon, but it's not quite there yet. All right, so we want to look at energy, which is right here. Okay, so here you can see that PMO, it is trying to make the turn. Crude oil has managed to make a little bit of a turn. It came down and tested some support, just like energy is, and it is headed back up. Today it is up just slightly. Under the hood is where I'm really interested, because I'm seeing action on the PMO, but what's going on under the hood? Well, we are seeing some improvement. There are more stocks above their 20-day EMA, but this is an early move here for energy. This is a high-risk play currently, because we don't have really strong participation under the surface. We're seeing an improvement in the short term as more stocks start to get above their 20-day EMA, but we're not seeing that same action in the intermediate and longer terms. So this is a sector that does look like it's on the move. It's going to make that turn for us, but oil's starting to act a little shaky. So I think that energy looks good right now. I was talking about this sector to my subscribers on Friday, and I still think that it looks good, but this is very, very new momentum. And you can see on a few of these other sectors that we also are seeing some very new momentum here, but we need to see the support under the surface. We don't have that yet on energy, but if it is getting new momentum and it is going to start moving higher, that under the hood these indicators would improve for that. But there's industrials, there's materials trying to make a turn. We have, what's the other one? Healthcare we talked about. Healthcare trying to make a turn, but not quite there yet. So to me, we're just not seeing the broad participation in this rally. And that's really, you can see that by which sectors are leading right now. It just, like I said, it just occurred to me today. I had the light bulb go off that's why those sectors are doing well. Those are cap-weighted sectors. And if the mega caps are leading, then those sectors are going to obviously look good. But the problem is under the surface, when you look at tech, there's still some participation going on here, and you can see it rising. But the Silver Cross Index is only at 50%. So only about half of that sector are on buy signals, if you will, in the intermediate term. So this is supported, but not completely supported. Let's look just quickly at a few industry groups. We were talking energy. Let's go ahead and look at those in the industry summary. So if we're getting the new momentum in the energy sector, where is it showing up? Where is it? Well, here's some new momentum on oil equipment and services. You'll notice a couple of these they're kind of double bottoms. I won't say they're typical. There is bigger double bottoms that are trying to form, but this little short-term double bottom is a bullish setup, but it isn't confirmed until we get the breakout, but it is setting up nicely. Integrated oil and gas, starting to see a little bit of a move, but I don't really like the big drop that we saw. We are starting to see possibly a double bottom that could come together in the intermediate term, but we're so far away from that at this point that we probably shouldn't be counting on that. And there is no double bottom here in the short term. So integrated oil and gas, while its PMO is trying to turn up, it's not looking quite as mature. Exploration and production is really one of the stronger areas. We do have a true double bottom. It is being confirmed right now on this price breakout today. You have a PMO buy signal, and look at stochastics moving almost directly up. So obviously exploration and production that's the area where you want to be if you're in energy, because these others like pipelines aren't looking so hot, and coal definitely looking bearish. But these are the areas that are looking interesting, if you will, these top three industry groups. If we go into exploration and production and just look at a few stocks in that area, I like to go in and organize by the StockCharts technical rank. And then I'm really interested, not necessarily in the top spot people, but some of the middle ground people as well as stocks people. Well, you know what I mean. So there's Evolution Petroleum, obviously having a completely different rally than some of these others. But this just gives you an idea of what is within. I like to look for these scooters that are in the 70 range. I think that usually offers some very interesting charts. Range Resources looking very interesting here on a possible breakout. Right now it is, hasn't fulfilled. But that's pretty much all I got for the sectors and industries. So I'm ready to dive into some of these simple requests. The first one is going to go a little bit longer simply because I need to explain my charts. But after that, we'll be whipping right on through. And we've got half an hour. So Dad, I think we're going to get to pretty much all of these.
Well, we can hope. CM.
Zoom. All right. So on my charts, obviously the price, the PMO, we use the OBV. You saw it on our other charts. I like to use the RSI. It tells me whether price is overbought or oversold. The PMO tells me about what's going on with momentum. OBV tells me what's going on with volume. Stochastics measure internal weakness, internal strength. And then I like to have relative strength on here too. I compare the group to the SPY. I compare the stock to the SPY. And then I compare the stock to its industry group. And the reason being, I want to find a stock that is performing better than the rest of the group. And that's one way you can find that out. So this looks like a pretty healthy chart here. I like the rally going on. Let's see, I want to get my inspect tool out so we can look at support and resistance lines. So resistance next up would be this top, and that is isn't too far. It's about 5.5% away. So I'm not saying that the stock is only going to be able to go up 5.5%. I'm just saying that that's when it's going to hit resistance. So you need to be prepared that that might be the place it'll pull back, or you put it on a watch list. You want to watch to see what happens when it gets to this resistance level. Does it turn down? Does it pull back and offer you a better entry? So that's why I always talk about where's the next level of resistance. So everything's going right on this chart. RSI positive and not overbought. You've got a really nice looking PMO. It is below the zero line, but it looks like it's going to be getting over. Stochastics, we want to see them oscillating above 80. That implies internal strength, and that's exactly what's going on. Relative strength is improving for the Zoom stock, so I like the way relative strength is. So I would say all of the check mark boxes have been checked, and the information is 5.5% away is our next level of resistance. So I think this one is on the buy list. It's in technology, which we were just talking about doing well. So let's go.
Weekly chart.
The weekly chart. And then we're going to go to a 5-minute. We need to make this log scale. So there's the strongest level of support, and that's where this bounce is coming off of. So that's good. The PMO is kind of surging here. Let's see, is the surge or not? Yep. We have a PMO surging above the signal line, meaning it's bottomed above the signal line. So that's especially bullish. And certainly the RSI is negative, but if this rally off this important support level can continue, we would certainly expect to see the RSI move into positive territory. So I like the look of this one. But I will tell you on all of these, even if I like the look, I am only 16% on the long side with my own personal portfolio. So I'm going to talk about these as buys, maybe, or sells, but I personally am not interested in expanding my exposure. So I just want to be clear that when I'm saying I like this and you could buy this, it doesn't mean that I would be doing that right now, because I'm still thinking the market, we're going to see the entire market turn down when these mega caps finally start to fail. So that looks good. 5-minute candlestick. I go to this chart to determine where to enter and exit. I don't use this to decide if I want the stock or don't want the stock. This is only a tool to help me enter at the best place and exit at the best place. The entries are determined by a 5-minute PMO positive crossover combined with a positive RSI. So in this case, the last buy signal on Friday came in at about 69.35. We had another buy signal come in here where the PMO turned up and crossed over while the RSI was positive. That happened on this big candlestick here. So that was at about 70.35. So not a bad thing to look for a 70.35 entry if you can get it. The PMO is turning over and giving us a sell signal right now. And that would be a sell point. I don't necessarily wait for the PMO to have a downside crossover, simply because if I don't want the stock, I'm kind of here looking for any excuse to get rid of it. And to me, an excuse to get rid of it is as soon as that PMO turns down. if I'm going to enter a stock, I need a little bit more than just the PMO turning up. So that's why it's a little different on your entry versus your exit. So at this point, no entry. Looks like you'll get a better entry if you see these rising bottoms continue. If you see price still trying to move up and the PMO moving down, that's actually not a bad thing. That's the PMO decompressing because you have a steady rising trend. So it doesn't necessarily mean that there's weakness there. It just means that momentum has become, you're not pushing down on the accelerator, but you're not really pulling up on the accelerator by much. So that's why you'll see that PMO flatten or maybe even go down. So this isn't a buy point necessarily, but if we're going to see this rising trend continue, then we'll have to make that a buy point. That makes sense. All right. So now we can zip through. Let's do it.
XME.
Miners. I think, did you look at the gold miner chart? I can't remember.
I didn't.
Okay. So we'll make a trip over there too. But the miners look even more bearish to me than the gold miners. And if you remember on gold miners, they've been in a steady rising trend, similar to what happened to metals and mining. But now with the decline, they continued their decline, whereas the gold miners managed to just keep it going. They're topping now, though. So this maybe looks like a little bit of a rounded bottom going on here. And the PMO is trying to turn up. But when I see the gold miners starting to suffer the way they are, and this has already been weak for metals and mining, I don't want to be involved in it. And so this one, it's a little too early. You can see where we got faked out on a PMO turning up, and I wouldn't want to get faked out on this turn on the PMO either. So with the lower low on this move, I'm not really thrilled with this chart. So I have to say that this would be a no-go for me.
How about a weekly?
Oh, we'll show the weekly, and I promised gold miners too. So weekly chart looking weak.
Yeah.
RSI is negative, PMO, weekly PMO in decline. And you can see that the StockCharts technical rank is barely 6% here. That means that this particular ETF is basically worse than 94% of ETFs. It's in the bottom 6% as far as intermediate term, long-term trend and condition go with that formula. So that's extraordinarily weak. And I'm also noticing the 17 and 43 week EMA having a negative crossover. Let me show the gold miner chart really quickly since we did talk about them. So with gold miners, very toppy. We have a double top here. It was confirmed. The minimum downside target is here at about $30. So we haven't hit that yet. PMO, everything in decline. Look at the puny participation going on here with barely, not even 4% here having price above their 20-day EMA. This is a this is an industry group that's in decline that will more than likely continue its decline, at least until we start seeing some improvement in participation like we did back here. You can see where it started up. But right now it's starting down. So I would not expect price to be recapturing those highs at this point.
Oracle?
Technology software, certainly a good area right now of the market. And again, all of these are good areas, but we have to be careful because the overall backdrop is a market that is showing internal weakness. So Oracle down over 1% today, but it has been on a really nice move to the upside here in this rally. PMO is on a buy signal and continuing to rise, so that's good news. Our stochastics above 80. The only thing I see as a detractor here would be two things. Number one is that this stock is traveling in line with the group. That's not a problem because the group is outperforming. But the minute the group is underperforming, we're going to see Oracle underperform likely first. So that is something to consider. The RSI is also overbought right now, which is why today's decline actually is a good thing, because we need to get it out of overbought territory. Typically, when the RSI gets overbought, you're near some sort of a decline. Maybe it's not a big one, but you're usually going to be in for some sort of a decline, or in this case, it was just consolidation. But I like the chart. I just think that, I might want to pick something else in the software space rather than Oracle. But I think the chart looks favorable. The weekly chart looks favorable. The only issue, again, is an RSI that is overbought. And typically, look at here, you can see right when that RSI gets overbought, it precedes declines and sideways movement. And so I would say that that's kind of what we're getting ready to see, is probably some pause to actually digest this sort of parabolic little move that it made in the shorter term. So ultimately, not a fan. I think it's an okay chart, but I wouldn't want to get involved in it right now just because that RSI did get so overbought. And it looks like we're more than likely going to be in for some sideways action versus some upside action. And if I'm going to jump in a stock, particularly in this environment, I'm going to want it to do better than that.
IoT.
All right, IoT. Well, we do have sort of a V bottom look here, and V bottoms are pretty positive. They would imply a breakout above this point. PMO is on a buy signal. It doesn't look particularly enthusiastic, but it's still on a buy signal. Stochastic's above 80, and relative strength is acceptable, I would say. So everything on the chart is looking fairly positive. Let's look at the weekly real quick. The weekly shows a surge above the signal line for the PMO, but I would say that we only have a little bit of information on that weekly PMO, so we really don't want to depend on it too much, but it is a good sign. It is rising nonetheless. And we have a really nice high scooter ranking. So I have to say, when you combine both these charts, I think it is a candidate for a long at this point. So I thought I didn't like the chart. I changed my mind. 5-minute candlestick. It looks like a buy point may be arriving right about now as that PMO is trying to turn up and the RSI has already gone positive. This is happening at a level of support. So I would say your buy point is pretty much in right now.
UNG.
UNG. Not a good day. I was surprised because it's actually started to look decent. I'm going to move this to a log scale just so we can see the action a little bit better here. I see kind of a double bottom that's formed here, and it was almost confirmed on Friday. Now it's pulling back at that level. So I still think the double bottom is in effect here. Well, it is technically until we get a breakdown here. And I think that that's a favorable look. You have the PMO, it is flattening out, but we have an almost 7% decline. I really think you can't expect the PMO to do anything other than decelerate. RSI is positive. I think UNG looks pretty good here, honestly. But the issue with UNG is you need to be prepared if you're getting involved in it, that this is a slow hold. This is one that you're going to have to close your eyes and hold your nose. That's what I'm doing. I know that's what Carl's doing. And just be prepared for a lot of downside and for a lot of upside. But if you lose this level, which is still, that's still another 12% decline. So if you lose that level, then it's all over with. I'd say that it's probably a time to maybe take that loss. But ultimately, this isn't going to stick around. We're not going to have nat gas this low forever. It's going to be moving up. The summers are going to be hot. There's a lot of things that are happening environmentally that tell us that we should expect UNG to move up. But I would say, yeah, we're probably in for a bit of a decline here, but we really don't want to lose this level of support. We really don't want to see that. But you just need to be prepared if you're going to get involved in UNG, that is the wild ride that you will have to accept in order to get the incredible, what we're going to see eventually here with UNG. It's going to be an incredible investment. It's just one that is taking a lot of time to percolate and happen.
the natural gas futures are in the $2 range. So a 2-cent move on that is a 1% move on the UNG. So it's very easy to move it. But I mean, I'm looking at that flat line there, and I think we've probably found the bottom. He says as he jinxed it.
Yeah, I know, right? Well, looking at the continuous contract here, I mean, you can also see a higher low over here, another double bottom. And in the case of this double bottom, it was actually on Friday confirmed with that breakout. So UNG is looking better than it has for quite some time.
Well, yeah, it does appear like it's not going down anymore.
Yeah, no, that's why I'm saying you still have you have the downside of 12% as still a possibility here. So if you're a little more conservative about this, keep an eye on it. You'll probably be able to get in at an even lower price, my guess.
Okay, MAXN.
Maxen. All right, so solar got a boost. At least investors saw good news in President Biden saying something about, well, it was about renewable energy. It was about fossil fuels of some sort. I can't remember, but basically it favored the renewable energy space. And so we got this huge rally off of that, but it immediately was erased. It clearly was a flash in the pan. I would ignore this big move because that's over with. It's done. We'll have to see if we get something back out of it. But this turned out to be an island, ultimately. We are seeing a rally off of the 50-day EMA, which I like. PMO is turning back up after a sell signal. So it's whipsawing back into a buy. Stochastics are turning up, but they are still below net neutral 50. And I'm not liking the relative strength. Sure, it's starting to show some over the last 2 days of trading, Fridays and what's going on today. But before that, it wasn't really a big performer in this group. In fact, when it dropped faster than most of the others. That's why you see this relative strength line that dropped like this. I would be very careful in the renewable energy space and don't get fooled by the fact that we got this big move. That does not mean we're going to see an immediate test of this level, which would be a big 20% move. The gap did get filled here, but ultimately, I think this is going to be pretty risky, and there might be better choices within that group. Let's look at the weekly. Well, the weekly is looking pretty good, actually. You've got a nice scooter. The weekly PMO on the rise, weekly RSI not overbought. Pretty much a rounded basing sort of pattern here. So maybe the daily chart isn't as bad as it could be. And maybe this isn't going to be a problem. But I'd say be careful here with renewable energy, just because I think this was an artificial move. But if prices are now going to make their way back up, that does look pretty good. And the weekly chart doesn't look bad. The 5-minute PMO is bottoming above the 20-day EMA. So there are a lot of good things on this chart. I just would be careful with that group. 5-minute candlestick chart, you are at a buy point currently with the PMO on this recent buy signal and a positive RSI.
BARP.
Baker Hughes. I'm going to go with Baker Hughes, but if you want to re-put that in silver, that would be great. So Baker Hughes, oil equipment services. This was one of the areas that looked like it was showing new momentum earlier. PMO buy signal, stochastics rising above 50. I like that look. Overall, outperforming the group, I'd say. Flat against the SPY. So I would like to find something that was a better performer against the S&P, but the group is starting to show a little bit of movement on relative strength. I don't think this looks too bad. You got a double bottom, but let's go ahead and we will peek at the weekly chart. If I can get the right button. Yeah, so in this case, the weekly chart doesn't look so hot. this almost looks kind of diamond shaped, or at least head and shoulder-ish. I would be looking for a decline on this in the intermediate term. So going to the short term, it would be a very short-term play.
Roku.
Let's see. I like the look. This is reminding me a little of Zoom, but Zoom looks a bit more powerful. We do have a bullish engulfing candlestick going on today, so that's good news. 6% rally. It's sort of a mediocre chart because, yeah, the PMO's turned up, but it did that before and fooled us. So I'd take that one with a grain of salt. Stochastics are oscillating in negative territory. Don't like that. Relative strength sort of petering out a little bit here. RSI is rising, but it is still in negative territory. I think that we're going to see a little bit of follow through on this one. It does look like it could turn into a double bottom, but we don't have confirmation really of this bullish engulfing candlestick. Let's see, what is our stop level? Would be around 9% on this to get below this level of support. So that's a little bit too hefty for me. The upside on that double bottom would be a 9, maybe 10% move to the upside. So I don't think the risk reward is here for this one.
Okay, PPI.
Industrial. Pitney Bowes. Man, I remember those old adding machines. I like the indicators here. They're maturing, but the RSI is still negative. I like stochastics the way they're rising, and that PMO buy signal certainly is encouraging. Relative strength, all right, I'll take it. Rising bottoms. Let's see, resistance is really strong here, which is probably why it turned back down on Friday when it hit this level. But it does look like it wants to break through. I would probably want confirmation that I got that breakout. That would be kind of my buy point. But if you want to get in early, just consider a stop. I'd say right in the 4.5–5% range here, just to protect myself, because it would be kind of an early entry. But overall, I think it's a positive looking chart. It could be better, but overall, I think it looks pretty good. The weekly, not so much. Mediocre scooter. PMO is decelerating, but not looking great. Weekly RSI negative. I would say looking at this, it would be a very short-term investment just because of the fact the weekly doesn't look that great. 5-minute chart. PMO surge above the signal line. So this is a buy point. I don't think you're going to be able to get a better one at this point because the PMO is rising so strongly. I'm favoring commodities right now, currently. So I do like the chart just for the fact it's a commodity, and I'm thinking commodities lately. But the price pattern isn't that exciting at this point. I think it could be a falling wedge, though. Let's just take a quick peek here. It is a falling wedge. So that gives it a nice little look there, but it's really early. This is really early. The stochastics are rising, but they don't look that enthusiastic. OBV in decline here. This looks like it could be a place where you're going to get that breakout, but I think it's a higher risk just because the indicators haven't matured. I mean, the PMO, maybe it's rising. I mean, I'd have to check. That's how, I mean, the fact that I'd have to check to see if it's rising tells me that the momentum just isn't there just yet. But I think this is an early chart. This could be interesting. And like I said, I do like corn right now. Weekly is ugly. I know that based on that daily. Really terrible scooter. I would say that, like I said, I favor the commodities right now, but look at this too. I didn't even notice this. That very strong level of support was broken. So I don't think it's the right time to get into this, but I really would, I'm keeping these commodities in my watch list right now.
ALTO.
Specialty chemicals. I like this cup with handle that now is starting to execute. PMO strongly rising. It's overbought, but we did see a minus 15 reading, so there's no reason we couldn't see a plus 15 reading. Stochastics look good. Relative strength looks good for the stock itself. 20 and 50-day EMA almost coming to a silver cross, which would be good as well. So I'd say this one looks pretty good. The weekly chart also looks good. So this could be maybe a little longer term, not long term, not even intermediate term, but certainly longer than what we were looking at for some of these other stocks. But I like it.
Okay, we've got about 40 seconds.
All right, so not a buy point on this one, PMO turning over. So you're going to probably get a better buy point on this. It's overbought RSI, so watch for a decline if this was one that you wanted to get into. Yes, 1 minute. I see the last, well, not the last one. The next one is DG, Dollar General.
15 seconds.
Yes, okay. Rounded top, don't like it. Come and check us out at our website. We would love for you to join our many subscribers. Here's a video you can watch to tell you a little bit more about our products. And if you're not ready to subscribe, go to our free newsletter, sign up for that, and you'll get information on any sales we might have and products and that sort of thing. All right, I'm going to stop my share and wish everybody good luck and good trading. We'll see you not next week, but the week after. Next week is Memorial Day. Thanks so much for attending.